Hi everyone, welcome back. Today I'm gonna have a pretty quick video, but just to go over the new TradingView footprint indicator and just show you an example of how I would use this as a confluence for a trade entry using all the combinations of things that I like: order flow, volume profiles, price action, etc. So this is a 1 hour chart of the E-mini S&P futures. Now, one thing to note, and I made a whole video guide on the new footprint indicator on TradingView, which if you haven't seen it, I'm going to put a link in the pinned comment below, which you can check it out. But, TradingView doesn't have real-time tick data like other platforms like Sierra Chart, Ninja, etc. have. So they do have their own method they use to calculate all these indicators. And if you go to the bottom right, well, it's underneath over here, there's a little tab that's called Help Center. If you just write in footprint chart, volume footprint chart, this is going to be an article where it's pretty much a guide telling you everything about the indicator and how it is calculated, etc. Okay, so that way you have a better understanding of how it is that it works. Also, I wrote to customer support at TradingView because I noticed I was planning on making this video weeks ago, and I took a screenshot of a footprint chart, and then a week later when I went to do the video, I noticed that all the numbers on the chart were different than what the screenshot was. I took the screenshot like the very same day that I saw the signal happen and I wanted to talk about it, and then when I went back it was different. Okay, and so for that I'm going to bring up the reply that I got from their customer support explaining how this indicator works here. Okay, so this here is the reply that I got from TradingView support. So it says, this chart type retrieves a symbol's volume data from several intrabar timeframes. For example, timeframes lower than the charts for its historical calculations. The time frame gradually increases with the exhaustion of available historical data, starting with the lowest available time frame. In other words, the deeper into the chart's history, the higher the intrabar time frame of the volume data. So the footprints for the chart's recent candles are the most precise since they use the most granular information in their calculation. The order by which the chart requires intrabar timeframes for calculations is 1 second, 1 minute, 15 minutes, 60 minutes, then 1 day. The highest intrabar timeframe requested for historical footprints depends on the chart's timeframe. And then they gave me this link, which is exactly what I just showed you, the footprint explanation of how the indicator works, okay? So basically what that means is, if you're using this footprint indicator to day trade, it's perfectly well. Like they're using, very low second time frames to calculate all the volume data for it. But as the days go by, then all the historical data on the very low time frame starts getting lost, and they have to move into higher time frames, and then the numbers are not going to be as precise. Okay, so anyway, that's just an explanation, because you might notice that the numbers, if you go back and you try to look at the footprint on, back somewhere around back around here, it's going to be a lot different than if you look at the footprint on the most recent charts. Okay, so here in the S&P 500 chart, I'm going to focus on a good signal that we had today. This was on Tuesday, June 4th. And you can see, if you look over the longer term volume profile that I have here, we have this very nice high volume node forming, and you can see the market at the beginning of the day. We had a big dump during the Europe Open, and then we came right in here, and towards the open of the New York session, we were above into the high volume node. We came back into the bottom, and then we pushed up, okay? And I've talked about this a lot in my number one volume profile rule video, where if we're like in an uptrend and price accepts back into a high volume node, I'm looking for signals to long towards the bottom of this high volume node, which is exactly what we had over here happening. So if I zoom in, you can see I have this circle here, and we're going to talk about what happened inside of this hourly candle at the 12 o'clock candle. So this is the 5-minute time frame, and here I have my session volume profiles, and you can see this one's in blue. This was the extended trading hours. So we had the open of Asia here, then 3 a.m. right around here we had the open of London. We had a little push up, big move down, and then we just started trending back up from 5 up until 9:30 a.m. Eastern when regular markets open. And then once we had that open, let me zoom in here now so you can get a little more detail. Okay, you can see that regular markets open, and remember the context that this shaded areas here, these are the edges of a big high volume node that we have over here. And so price came up, market open, we had a push up, then we started coming down. We did hold a little bit here, but then we had a dip underneath, and then we came and recovered that level. And you can see here how this was a very significant support resistance level right over here. If I mark this off, like this, and let me put like a purple color there, you can see this was a pretty important zone because we had support, broke, then resistance, and then we broke back above, and then we started holding it as support. Also, this zone here, if you look at the session volume profile, this was developing as the session went, but you have a very significant cuts in volumes here. You have this big, we have this big high volume node here, and we were coming back into this cuts in volumes. So now let's turn on the footprint indicator and look at this pin bar candle that we made on the 5 minutes, where we tested this support, resistance, broken, and now support again from on top. So we put in the footprint chart. Now I'm just going to zoom in a lot because we need to see the numbers. This footprint, I'm just going to show you quickly the settings that I have on it. Okay, just here, I'm not going to go into detail, but you can just pause and look at it. I already went over all the settings in my footprint video, but you can see I have the gradient. So the darker is the larger number of volumes. I have it set as a bid by ask footprint. So executed aggressive sells on the left, executed aggressive buys on the right. And then you have the total volume and the delta underneath, which, as you know, delta is the difference between executed buys minus executed sells. So when you have a negative delta on a candle, that means there was overall more executed aggressive selling, and it's green, it's the inverse, okay? And so what I like to see with the footprint chart, one of my favorite signals, and I talk a lot about this, I have a lot of examples and strategies going over this in my order flow course, is that I look for divergences. And in this case, I'm looking especially on this candle, because you can see we came up on top of the low volume node support, we retested back down, and now we're expecting a push back up, since we're testing the bottom edge of a higher time frame high volume node. And you can see that divergence, we got it right here on this candle. You can see here we have a green pin bar candle, very good rejection wick. We have a negative delta of 628, even though we had a pretty bullish looking 5-minute candle here. And then if we look at the bottom area right here, if we pay attention here to the numbers that we have executed, you can see how we had a lot of aggressive selling right at the bottom wick of this candlestick. If you compare the numbers on the left to the right, plus you have 3 stacked bearish imbalances, and yet with all this force that the sellers were trying to bring this down, market bounced and we held above the low volume node support, and then we ended up pushing higher. Okay, so this is a very nice signal for me. If I see this, then for me this is a very clear signal to long, and in this case, you know, my stop loss would just go right over here, you know, just right below this wick, underneath this divergence would be my stop loss. And you know, then I would just look for you know, the next logical take profit level, which if I just go into a regular candlestick chart, you know, you can see we had VWAP, which, well, we're very close to VWAP, but that's definitely the first area to look out for. But then you can see how we broke above, and then we continued holding. We did come back for a second retest here. And again, you can see that these areas, when you get these divergences, these areas will tend to hold on retests. And again, we're still also right at the bottom area of this node. So, you know, I would first look at VWAP, and then definitely I would look at this wick high plus the top edge of, well, this was developing. So at this point when we were here, this was not developed yet, but still, you know, I would be looking at this wick high that we made as a good target if we get past and hold VWAP, for example. Okay, but that's pretty much in a nutshell one of the ways that I use footprint chart as a confluence in order to get into a a trade, using order flow to help me guide my bias and let me get more precise entries and let me also manage my risk better. Okay, that's pretty much it for the video. Hope you had a great week. Remember to subscribe. Remember to check out in the description all the links for trader funding discounts, and I will see you all in the next video.